Let's talk about bank reconciliations. We'll explain what a bank reconciliation is, why it's easily the most important part in producing financial statements, how to prepare a bank reconciliation, and what to do if you have reconciliation differences. So let's start with what exactly a bank reconciliation is. Bank reconciliation, or bank rec if you want to sound cool, is the process of reconciling the balances shown in your financial statements for both your bank accounts and credit cards. So here I have a balance sheet and I'm reporting a bank balance of $15,000 and a credit card balance of $2,000. So a bank reconciliation proves that these balances are actually true, and it's easily the most important step in producing financial statements. Why? Well, cash is king. You don't want to take any chances that there are fraudulent activities taking place in your financial reporting, especially when it comes to matters of cash. And a bank reconciliation is one of the easiest ways to prove that the balances either match or have differences that are acceptable, which we'll cover later. Think about it. Most companies record their financial statements on the accrual basis. That means income gets recorded when it's earned, while expenses get recorded when they are incurred. So imagine I'm considering buying another business and I want to do my due diligence to ensure that the books are both accurate and complete. Well, if I wanted to verify that the revenue they're recording is correct, I'd have to analyze each of their contracts and their work papers and proof that each product or service was delivered. Now, don't get me wrong, I can do all of these steps and most likely will as part of my due diligence process, but it'll still take me a while. But if I wanted to prove that the cash and credit card balances that they are reporting are true, well, that's so simple. I just need to analyze the statements from their financial institution, compare it to their financial statements, and review the bank reconciliation report for any differences. But there's another reason why bank reconciliations are so valuable. See, there's a saying, garbage in, garbage out. In order to get the proper insights from your financial statements, you need to have correct data. Think of it as a pyramid. You have clean source data over here, then proper classifications and mappings, followed by analysis, and finally, insights. If this part is weak, everything will fall apart. And one of the best ways to prove that you have an accurate starting point with your data is to confirm that the transactions that flow through from your bank and credit cards are also flowing through into your accounting software. And without this, you have no idea if the values are reported correctly. For all you know, you may have accidentally synced in information from a different company into your accounting software. All right, so now that we know why bank recs are so important, let's go over how to prepare one. We're going to use one of the most popular accounting softwares, QuickBooks Online. But first, if you're new to this channel, hey, I'm Josh, your CFO guy, and I help people like you grow in your career in finance and accounting with fun and engaging content. Go ahead and hit that subscribe button. I got so many cool videos coming up that you really won't want to miss. Okay, now let's dive into preparing a bank reconciliation. So here I'm in QuickBooks Online, and here I have a bank feed. This is a feed that showcases all of the activity for each of my bank and credit cards. And if I click on Go to Bank Register, I get to see all of my transactions as well as all the transactions that have been reconciled with this R over here. So let's now reconcile the transactions for the month of April. So I'll start by clicking this Reconcile button over here. Okay, so now I'm being asked for which account I want to reconcile. I'll go ahead and choose checking as such. I can see the most previous bank reconciliation by clicking on this button over here and seeing what it looks like. Let's go ahead and perform one together though. Okay, so now I can see my beginning balance. Recall an important aspect of the balance sheet. All values shown here are cumulative. So if I have the wrong beginning balance, I won't be able to match to my ending balance. So let me open up my bank statement by logging into my bank and grabbing that statement. Okay, looks like the beginning balances match. Phew. So let me now track what the ending balance is per my bank statement. And as you can see, it's this figure right here, 3958.61. And this is key. This is a legal document from a regulated financial institution showcasing an important number. My financial statements need to show at least one of these two things. One, the balances match perfectly, or two, the balances don't match, but for acceptable reasons, which we'll cover shortly. So I'll enter in my ending bank balance over here, and then I'll enter in the ending date. Now the ending date is the date that matches to your bank statement over here. This may be the end of the month, but it could also very well be a random date in the middle of the month, especially for credit cards. So the key is to enter this date and compare all transactions in your accounting software that run through this date. Okay, now let's click Start Reconciling. Here I have my bank reconciliation. QuickBooks is saying, okay, we have a beginning balance of 4349.46. The statement ending balance is 3958.61. So my ending balance minus my beginning balance gives me a net change of negative 390.85. But I haven't yet selected any payments or deposits yet. So this is the difference between what my accounting software shows and what my bank statement shows. Now, you may have been tempted to just click this button right here to select all transactions, and then you're set, right? Well, not exactly. As you can see, we still have a $206 difference. So to fix that, I'm going to uncheck this and compare what I see in my accounting software line by line to my bank statement. Yep, that's right, line by line. Come on, get out that magnifying glass. What, you thought that this was gonna be easy? Well, if it was easy, would they pay us the big bucks? Okay, so now I have my bank statement to one side and my bank reconciliation to my next. I'm gonna go line by line to compare where exactly the differences are. If helpful, you may wanna instead print this out and tick off transactions with a pen or a highlighter. Okay, let's begin. So I'm gonna click on payments just to review my payments. Then I'll start going line by line as such. Okay, so this check matches over here, and this expense matches over here, and this bill payment matches over here. And I'll just continue checking each of these items off. And this matches. Okay, now I get to my last transaction for $900. This actually doesn't match. I can't find this over here under the electronic withdrawals. So I'm gonna leave this unchecked. Now let's go to my deposits. Oh great, these are actually much less in quantity. So this matches over here, and this matches over here, and this matches. Okay, looks like we got another difference. This final payment doesn't match. So if I leave this unchecked, check it out, my bank rec ties. And let me tell you, seeing this $0 difference, well, that's a great feeling. So I'll just go ahead and click on Finish Now, and now I've completed my reconciliation. I could click on View Reconciliation Report to see the details of this report as such. So this shows again my beginning balance, the payments that cleared, the deposits that cleared, and then my ending balance. These are any uncleared transactions as of 4/30/2024, and I could see additional details over here. This report is really useful. But wait, why didn't those two transactions tie? Well, that brings up an important topic, bank reconciliation differences and which ones are acceptable and which ones are not. Check out the date that we had these transactions. This is the very last day of the month. Well, it's very likely that these are real transactions and they'll show up on my bank statement at the beginning of the following month. So this is acceptable. And check out some of these other transactions, checks that we wrote. Well, believe it or not, some people still actually use checks. I know, right? It honestly surprises me every time. Well, it's possible you wrote a check, recorded it in your accounting software, but the vendor never cashed it. So it wouldn't show up on your bank statement until he or she actually cashes that check. So this would be another acceptable difference between the two. Both of these are really just examples of timing differences. In the first case, the transaction took place, but it was really just a day or two off from when it hit the bank and when it fed through into the accounting software. In the second example, the transaction took place, the check was issued, but it didn't get cashed yet. Well, I want my accounting software to show my bank balance as if the check got cashed because I don't want to forget about it. So with both of these exceptions, you just want to keep an eye in the following months to see what happens. If you still don't see that these transactions posted on your bank statement, you may want to investigate and see if they really should be removed. And while we're on that topic, let's talk about some other differences, this time ones that are not okay. And a perfect example is a duplicate transaction. Sometimes transactions will come through in your bank register and they'll mistakenly get duplicated. That's not a good thing. And neither is the opposite. If a transaction is missing from your bank register, that also isn't a good thing. Sometimes there could be connection problems, which can cause transactions to go missing. The solution under both of these scenarios is simple. Remove the duplicates and add back the missing transactions to your accounting software. Now, you may also have an example where the transaction matches, but the amount differs. This can be if you mistakenly edited the amount to make certain adjustments and somewhere along the way, things just got misaligned. That's another item that you should update in your accounting software, and that scenario can be a common thing under accrual accounting. And over here is a video about accrual accounting where you can learn the differences between that and cash accounting. So just go ahead and click that. But until then, what questions do you have about bank recs? Let me know in the comments below. And if you enjoyed this video, don't be shy with the like and subscribe button, and I'll catch you next time.